All right. Hey there, everybody. Let's see. Sorry, getting all this software set up over here. Hopefully, y'all are doing well. It is a few minutes after 11 a.m. Central Standard Time here on Friday, the 18th of December, 2020 in San Antonio, Texas. Absolutely great to have you all here. Not really. I just set up the chat, so I can't really read. I don't know. Maybe I can. Let me see here real quick. Can I read what y'all who's here already? No, y'all have already scrolled by. I see Data's here. Unfortunately, it's not coming up in my my little thing here. I have this, see? And I just loaded that up. So I didn't get anybody prior to Spiral Architect, so I cannot say hi to you. But anyway, as I said, it's a few minutes after 11 a.m. Central Standard Time here on Friday, the 18th of December, 2020. In San Antonio, Texas. A little bit overcast today, but still, it's a great day to be alive in a great city. Real good family city here. I'll tell you what. As I told our Discord members, Austin just down the road is a lot of California. But San Antonio is a great little family town. I say little, yeah, it's kind of big. But anyway, if y'all ever get a chance, you should visit it at least at some point. So. Good to see y'all here. Let's see, who is it? Like I said, Spiral Architects here. Cameron, what's going on, man? Sylvia, what's going on? Checking in from South Africa still. Mads is here as well. Tell You Rider, what's up? Let's see, who else is here? Data says the purpose of education is not to validate ignorance, but to overcome it. That's right. That's right. Purpose of education should be to teach you how to think, guys, not to, absorb somebody else's whatever their mantra is. So it's a great thing if done correctly. Otherwise, people say, oh, look, I've got this education, and yet they're still idiots, right? Let's not do that. Hey there, Sean. Good to see you. Block Tech checking in. I see you, Sir Hold is here. Pedro, hello there. How are you doing? Gosh, I can't even say it. Onyx King, yes, I know. Christmas in a week. And that's something we're going to talk about today, guys, because we've got the holiday week coming up. And that's going to mean a little something for markets, okay? If you're not used to trading markets, you may not know, so we'll talk about that a bit as well. Hey there, Jordan. Good to see you. Milsey is here. Yo, what's up? Wazobia Dollars is here. Amber Lee, good morning. Scott, what's up, man? Hey, look at that. Scott Melker checking in. I'm going to make him wish he didn't check in probably, but it is what it is, right? Flaming Gala, good to see you as well. Let's see here. Amber Lee's talking about one of my charts that I have there for our members. They said that they took profit last night and then got back into a better position this morning. Your charts are excellent. I appreciate that. Thank you. Thank you. Helder, what's going on, man? Doug, are we going to the moon? I think so overall. There might be a slight detour on the way, though. Nobody likes to hear that. But, guys, you know what? Honestly, listen. With what I try to do with y'all here, I can't just be all emotionally bullish and then that's all it. I've got to let you guys really recognize the other things that are going on. But in doing so, that doesn't mean I'm bearish, guys. Again, I'm probably one of the most bullish people you'll meet, but just because I don't go around, hyping it up and all the time, makes people think I'm not. Because I discuss the other possibilities that could happen, the detours along the way. People think, oh, you can't possibly be bullish. It's the biggest, I can't even, struggling for words here. It's the biggest load of malarkey. We'll say that. Patrick, checking in for the Netherlands. Good to see you here. Let me see here. Man, really glad to have you guys here. Anyway, so we're going to talk about some stuff today. Listen, if you haven't yet, please join us at howtotradetowin.com. Tons of education, tons of possible setups every week. We got daily and intraday updates for up to 20 different assets across all the markets. And beyond all that, again, we've got, tier 3, we've got the, what do you call it? Chart requests and everything else, critiques. We've got the DeFi channel in there. Geez, guys. And it's not even really what we do. It's really a lot of what our members are that make it so special. Because we're lucky enough that most of our members have been with us at least, 6 to 8 months. Many of them 2 to 3 years. And so it kind of creates a real home community feeling, guys. People are polite to each other. They don't make you feel bad. By the way, if you're a new trader and you come in on any tier, you can talk to Adam. He'll hit you up when you first come in, say hi to you. And he'll talk to you. And if and if it seems that you're a new trader, he'll give you access to our new traders channel where you can not feel so intimidated maybe to ask questions. I know even though we tell you, hey, listen, the people we have in here are great. They don't make fun of you. They want to help you. It's still hard sometimes if you're a new trader. So we put together a special channel just for new traders, and you can be assured that anybody in there is a new trader. So if you're asking a question, it's likely one that they've got as well. So just keep that up. By the way, if you want to try out Tier 3 for 1 month at half price, let me see here. I've got a code here for you guys. Let me just find it here real quick in case you haven't tried it yet. We've only got a limited number of these available. We don't do this for just everybody everybody that wants to come in. We have to be sure to limit it because we're really working hard to keep our community what it is, which I think is one of the better parts of being a part of what we do than a lot of other groups. We want to grow ours, but we want to grow it in a certain way. Everybody else is just like getting as many members as they can as quick as possible, and then everything kind of suffers. But I do have a God dog it. Let me see if I can find it here real quick, and then we'll get onto the charts here. Where is it? It was in Wednesday's stream. Let me see. Right here. There it is. You can use this code when you go to purchase 1 month of Tier 3. If you're brand new. By the way, this is only for new members. This code will only work if you haven't been a member before. But that code right there, Tier 3, 50% off first month, as it's shown there with the numbers and letters the way they are. Jump on it. Try us out for a month. You'll see that, we aren't kidding. The content's there, the people are there, the education's there. And that's really what we're all about. So, again, howtotradetowin.com. Go in there, 1 month, grab you a 1 month Tier 3, put that code on, get it for half price. Let me see here. Hey there, Dr. Crypto. Good to see you. Baker's checking in as well. Let's see here. Pedro says, I agree. Bottom of the DXY. Bitcoin reversal. Bitcoin was at Bitcoin daily. Not daily. The dominance chart. A doji on the daily. Is that what you're seeing? Okay, let's talk about all that. All right. Let's see here. So, what do we have right now? Let's start big picture, guys. Big picture. Let's zoom back out here. If we look at this. Okay. The first thing to remember, and it may not be a big deal, but it's something to pay attention to. We've got a TD9 on the monthly at resistance, at the R3 resistance. Okay? It's part of this whole all-time high area here. Because, why do we say that? Because even though the all-time high is down here, the fact is price has not opened and closed above that level yet. And what you need is an open and close above it, plus follow through the next candle. Okay? And so what do we have here? We have last month where it just kind of hit that all-time high. We have this month, which started below which at one point dropped below it, and now we're above it. So what we're doing is we're straddling this this all-time high right now. It has not broken out through the all-time high. You have to understand that on the weekly or on the monthly, because we do not have a close, an open and a close above the all-time high, and then another candle following through higher. That's what you need, okay? You always need confirmations in trading, guys. So we may be bullish, but there is the possibility, especially with a few things we're talking about today, that could see this turn around and just tank on us, over a while. All right? But none of it's guaranteed. And I'm not telling you that's what's going to happen. I got to make this point clear because too many people, irritate me. They waste my time with stupid DMs and comments. Oh, you're so bearish. Oh, you're this, that. Nobody's listening. That's the problem. So if you find yourself in that category, please let yourself out. Or if you'd like to learn something, hang around. But, I have a habit of just blocking people that start doing that because I don't have the time in my day to sit here and keep explaining something that I've explained multiple times before. Remember, guys, you don't get to where I am at in life by being lazy, by half listening. If you're being lazy and you're listening to half of what somebody says or less, and then you come up with stupid comments like that, trust me, they will ignore the heck out of you. And it makes you look like an idiot. Don't do that. Show that you've got something in life that pushes you forward. So to show them that you're actually doing something, that you're not just trying to be lazy and just kind of half-ass your way through life. If you do that, man, it's just no respect from those of us who are doing things in life, making strides, hitting goals and making new ones. We don't have time for stuff like that. So, if you come at me like that, most of the time I'm just going to ignore you. I usually give you one free chance to kind of check yourself. And if you don't, I'll just block you. I have no qualms with doing that. Some people on social media are like, oh, well, man, you shouldn't block me. What, are you scared of what I have to say? No, I just don't have time to deal with the nonsense. Again, if you're going to say something stupid because you're not paying attention, I don't have time for it. And I tell you all this, guys, because I get a chuckle out of saying it, because it's true, but also because I need you to understand as traders that you need to stop worrying about what anybody else says. Okay? Stop worrying about what some other idiot online says to you. Who cares? Stop arguing with idiots. They're online. Most of people online that you're going to see, especially in social media, do not think through anything. They don't. Stop worrying about what they say. And I say that because when it comes to trading, it's all about the psychology, all about the emotion. And if you're always worried about what somebody else thinks, that's going to make you do things that you shouldn't be doing. You're going to hold on to trades when you shouldn't hold on to them. You're going to enter trades when you shouldn't, because you're going to feel like you have to follow through on something you said at some point, rather than saying, oh, wait, there's new information here, and what I thought previously is no longer valid, and I don't need to do that. But I talk to you guys all the time in DMs and everything, and you guys tell me about how this is happening. Stop doing that. Stop letting everybody else... Stop getting your self-worth from what somebody else thinks. All right? You cannot do that as a trader. Again, remember what I've told you, trading, to be a trader means that you have to believe that you control your destiny, that you control your future, that you can make things happen for yourself. And if you believe that, then it doesn't matter what Jim, Joe, or Jane says. Especially if there's some anonymous idiot online. Okay? So make sure you guys pay attention to that. Let's see here. Jordan talking about Trump, man. That's some fun stuff. I saw some article just the other day where they said that he may not vacate the White House. Guys, I got to laugh because partially as somebody with a law degree and the particular background I have, I've got a master's in Homeland Security. I've got a master's in applied economic psychology. I've got my law degree. And so when I look at that, and I just think, man, and then I look at 2020 and the way it's been, and I just think, man, that's the end of, that would be the end of 2020, right? That would be the way to end it. How do you top everything that's happened this year? Trump sits in White House. Ugh, crazy stuff. I know Jim, Joe, and Jay all the time. Sure thing, sure thing. Yes, check yourself before you wreck yourself. Hey there, Alex T. Good to see you. So anyway, let's get that out of the way. So big picture is TD9, monthly, R3 resistance. I'm really more interested in the all-time high resistance because this monthly pivots here are going to renew in a couple of weeks, less than 2 weeks. They're going to change because these monthly pivots are valid for a year. So I'm not so interested in that it's at R3 resistance. I'm interested that we don't have an open and close on the monthly above the all-time high and then follow through. So again, what does that mean? I've talked to you guys time and time before about it. If you believe this is a 1, 2, 3 here, then this necessarily has to be an ABC. And if this is an ABC, this right now is an A, a B, and a C. Above where point A starts, potential expanded flat correction. Now, there is the possibility that you could have a running flat. A running flat is really rare. A running flat starts the same way as expanded flats. You have your ABC down for A. You have your ABC up for B above where A starts. But what you'll have is you'll have your 5 down for C, and it only comes to the interior here. So you would see something like, maybe something like this right here. So you have your A, B, C. Here's A, B, C, and I think it would probably go, we'll put it up here. And then you'd have like a 1, 2, 3, 4, or something like that. Okay? Now, why do I put this all the way up here around 30,000? Because if it's a running flat like this, then it usually overextends a lot further than what you'd normally expect. It pushes up a lot further above wave A. If it is an expanded flat, then generally we look for price to target the 123.6 extension, the 123.6% extension of wave A. So you measure out wave A here. Go to settings, let's see here, make sure that it's on there. 123.6 is checked. And then that shows you here that you've got that 123.6 up here. Where are we at? Oh, I gotta turn this back around. Reverse that. There we go. So we've got that up here, right here, at this blue dash, or this black dash line up here. That's why I've got that up there. So that's that 23,727, which is what we hit. If you guys were even here just last Wednesday, you know this was the initial macro target we were looking at. Forget how it gets there. That's where we were looking at, and that's where it hit. It went a couple of bucks above it. $7 or something like that above it. Here on Bitstamp anyway, which is the chart we're using. So, you've got that. Now, that doesn't mean it can't go up a bit higher. But generally, your expanded flat is usually going to hang closer to that 123.6. And your expanded flat will many times go up to 161.8. You know, it'll fake you out, making you think it's a wave 3. When it's just an expanded flat or a running flat. But if we get a reversal anywhere around this 25,000 area, that increases the odds significantly that we've maybe got this expanded flat going on. And if it's expanded flat, we're going to drop below. We necessarily have to drop below this swing low over here at 3,100. We have to. It's an expanded flat. That's what it does. Wave B terminates above where wave A starts. Wave C comes down in 5 waves below and terminates below where wave A terminated. And I know right now, if you're not used to hearing me, this is shell-shocking, right? But I'm not saying it's going to happen, guys. Again, as I said, you could have this continue to push up around 30,000 or 32,000 up here. And to me, that would mean, okay, if we're going to have that, it'll probably be a running flat, which means you just pull back down here to maybe 10 or 15,000 or something like that, maybe. Before heading up further. So that's kind of where we're at in the big picture, guys. Again, big bearish divergence here on the monthly. Pretty much all exchanges, volume has continued to die off since this high up here. Volume has not expanded all the way up. Now, there's a few that it has, say like Binance, but Binance just opened up right here. So, of course, its volume is going to be minuscule. So that's not a real good place to look on that. You want to look at exchanges that have been around a while and see how their volume is done. But then you have things like BitMEX where their volume's dropped off a lot because of, their legal situation. So it's really hard to kind of get a whole thing of that. But generally, it looks like volume has just been kind of drowning off of everybody. Almost all exchanges, other, like I said, the ones that started more recently. So, that kind of has me iffy. So we do have this going on. Now, locally here, let's get in here. So last night can be 3 white soldiers on the monthly chart. Let me see here. Potential. My iffiness with that is this wick right here. See this wick right here on this third candle? Basically, they should look like these candles here. Instead, you have a pretty large wick coming down into that. Because what 3 white soldiers show you is basically 3 advancing candles sitting on top of each other. The dipping down into it starts to negate that. This is a pretty big dip into this candle. And so I would be really cautious about that, potentially calling that a 3 white soldiers. And you would also expect to see a larger one. Price has to close up toward the top. It can't have it can have a little wick like this one or this one. But here you start to get a decently sized wick. And again, that's that other side of it. You shouldn't have wicks. You're looking for 3 bold candles on top of each other. So maybe, but I would definitely want to see how it ends at the end of the month. But this drop down in here kind of has me really iffy about it, honestly. That's a pretty big drop into this other candle. So, again, just looking at the way that the rules fall out, and the guidelines that you use for candlestick structures and whatnot, that would be my issue with it. Let me see here. Let me see here. So, okay, so last night, so we've been playing with this, kind of working this range here in Discord. And so last night I told them, listen, I said, we were up here, and I said, it looks like we've got a triangle playing out here. My initial target was around this pivot area. But as long as, and as I always say, as long as wave E doesn't drop below wave C, it's still a valid triangle. If price drops below this wave C area, the triangle is invalidated. Now, one of our other members brought up the point that some exchanges, this is a lower low here, I think is what they were saying. I know, for example, Coinbase has a lower low right here. So there's no triangle on Coinbase. You have an A, you have a B. C cannot drop below A, and yet there we are. So what you have to do on these exchanges, you have to figure out, okay, well, what's the count there? So like if I'm looking at since I can't have a triangle here on Coinbase, I would probably be looking at this maybe as A, B. So you've got this flag going on, right? 3 down for A, 3 up for B. And then maybe an ending diagonal here, in which case you'd have it would have to be an ABC for 1, 2, ABC for 3, 4, and you get an ABC for 5. My big issue with it is this area here. Let me see here. This is, this would, I guess, be wave 4 right here. It is so significantly larger than what wave 2 is. See that? And so even though they say, again, theory of alternation, if you've got a sharp, narrow wave 2, then you'll have a wider, more shallower wave 4 kind of idea, right? Well, that's fine and dandy and everything, but you're still looking for some kind of size relationship between the two. In this case, this is significantly wider than what wave 2 is. When you compare these, I mean, I can't even get in there close enough without probably, messing up this box here to try and grab it. That's how it is. I guess I could always grab this one and pull it there. But I mean, look at the difference there in width between the two. So that makes me really kind of iffy about that. So what are other possibilities? Well, other possibilities then are maybe this is a W, so ABC down is a W, ABC up is an X, and then this becomes a Y. And in that case, you would have to, think maybe you've got a 1, 2, 3, 4, 5 as A, B, C is B, and then you're looking for 5 down for C. So that could still take you down a little bit lower here, because a Y is an ABC. But if it does that, then, again, if you look back to Bitstamp, that would probably take this price below here, invalidating the triangle as well. But you can use the same count. I'll be honest with you, what I'm really struggling with those counts is this right here. This looks like a pretty clear ABC. So, if I look at this, I say, okay, what else could potentially be going on? Well, we could have a W, an X, and then you could have a triangle as a Y. So maybe A, B, maybe even C here, D, E. So you've got, again, a W, X, Y. And then X, you'll have 3 up as an X, and then you'll have 3 more down as a Y. So a W, X, Y, X, Z. As this continues to play out here. Potentially. Again, you've got to understand what your possibilities are here. Now, the other thought, a little bit simpler thought, is maybe this is, an A and a B, and then this is all working as a C down as an ending diagonal. That one maybe works. A, B, C is a 1, 2, and then you have an A, B, C as a 3, you'll have a 4, and then you have an A, B, C as a 5. That would work. That takes care of this ABC right here. Because in an ending diagonal, all waves are ABCs. They're all corrective. In that case, if we lose this swing low over here, we'll look for a minimum of the 38.2 retracement here, which is at about 21,951, and potentially even the 50% down here, which finds confluence with, right now, the 15-minute S1 pivot and this demand structure EQ right here around 21.4. So you could get basically a, let me see here. Here we go. So you can get basically, you get an A, B, C as a 1, A, B, C as a 2, A, and probably B, C as a 3 maybe, then A, B, C as a 4, then A, B, C as a 5, something like that. Where you can have that. It's definitely a possibility. So if you think this is a triangle though right here and not that, then what you want to see is an advance above the wave D swing high up here. So that's a 23,284 or so on Bitstamp. If it goes from here without violating wave C and pushes back up above wave D, then that suggests this triangle is legitimate and it's heading up. And if that's the case, then based on the height of the triangle, your target is only about 23,835. It's based on this. Now it can go higher, but again, looking at pattern targets, that's where we would look. Now, some other things that we still have is we have this ascending channel, which price broke out of, and the pattern target based on that is this one right here at about 25,300. If we're looking at this, if we're looking at the purple count here, this wave 4 would be potentially just an interior wave 4 for a larger wave 3, okay? And so if that's the case, then what we would be looking at is we hit that target just barely above there. That gives us wave 5 of 3. Wave 4 then pulls back pretty much toward these lows, the same area down here that's getting all this work. And then you'd have wave 5 going up. And wave 5 would then come and kind of target up here around 26,591 if it extends fully. So this 24 to 26,000 area, 26.5 area, is I think the very important area right now. If we get rejected in this area, strongly rejected in this area, and we trip up some larger time frame swing lows on the way, there's a good possibility that could be the top. And within that area, it means that we maybe are seeing that larger macro reversal playing out. But if it continues going up to 30,000, you start feeling less and less like it, more and more like it's potentially a 1, 2, 3 heading up. But again, even with that, like I said, you still have to be aware of the possibility of a running flat. So it's going to depend on how price actually moves up there. Now, the one thing you should be paying attention to, especially, look at this. On the weekly here, what's going on? We are going straight up, basically, from the mid-11s. On a weekly time frame, if this were to drop, I could see a bounce right here in the 18s and full on down, all the way down here to the mid-11s. Because there's nothing here really holding it back. You've got these other levels from previously, but recently there's nothing there holding it back. You would have to hope it would bounce, in this 15,000 area. So if I'm looking at the weekly, probably right about here between these two candles. Right about 15 and a half, almost 15,450. Would be where you'd hope that it would bounce. If it continues on through that, it really starts opening up that move much lower. This is a parabolic advance, guys. What y'all are excited about here. That's what we're getting here. Which means the same possibility is also there. Remember, parabolas, when they finally blow off, they retrace 60 to 80%. Yeah, it's just a normal Bitcoin retracement, right? But seriously, that's what you do. You don't look for a small pullback. So if we've got parabolicness going on here, that becomes very real. And we start looking at those, those areas we're at in terms of monthly or weekly and where that resistance is. Now, this is just looking at the Bitcoin chart. If we look at things like, let me do this here. Again, this is probably where you guys are going to hate me. I know everybody's all up Sailor's rear end. But what I need you to understand is we talk about sentiment and markets and how you kind of start looking at markets and where they may be tired, where they may be on their latest legs, their furthest legs, where before something more major, a reversal or at least a strong pullback occurs, right? Listen, we have just barely recently got above the all-time high. We're not that far above it right now. And we have people talking constantly about 400,000, 1 million, 8 million. These kind of things, this kind of discussion usually happens at the top of a move. This is when everybody's excited. People are not excited at the beginnings of bull runs. They are excited at the end of bull runs. That's what encourages retail to buy the tops. Retail's too scared to buy the bottoms. There weren't too many people that bought with Scott and I down there around 3,200 when we were down there. There were a lot of people that sold at 4,000 on the way back up at 6,000 and at 12,000. Well, they didn't sell at 12,000. So that at this point right here, again, this is where everybody got excited. That's where the market came back against them. Everybody is jubilant over here. I mean, CNBC, Barron's, everybody is talking about how this is going up. And all these great big targets, right? But there's a couple of things to keep in mind. One is, it is an asset that's denominated in dollars here, right? We're looking at the BTC USD chart. That necessarily means that if the value of the dollar rises, and I believe Scott had a tweet today about this, or yesterday or something, talking about the value of the dollar versus other things. And so if the value of the dollar increases, guys, necessarily that's going to put downward price pressure on Bitcoin and all other assets. Necessarily. This isn't like, oh, I want this to happen or, it may not happen. No, this is what happens. All things held equal. If you've got Bitcoin price right here and the value of the dollar right here, if the value of the dollar drops, price rises because it takes more dollars to buy it, right? It takes more dollars to buy that asset. Price necessarily has to rise. If the value of the dollar rises, though, guess what? It takes less dollars to buy that asset. All things held equal, that asset's price necessarily must drop. Now, there are some caveats to that. Do we have significantly more demand pressure coming in versus supply pressure to combat that? Does it, it's dropping anyway, but does that demand pressure kind of push price up? So maybe it's not dropping as fast, or maybe it's holding its own, or maybe even it's increasing. That's a possibility. But here's the thing. If the dollar rises, then these people that you guys are excited about, who necessarily are saying, listen, we're getting into Bitcoin because we're concerned that the US dollar may devalue. In other words, there may be inflation. They are telling you right then and there that they are not going to stay in Bitcoin if the dollar value rises, if deflation hits. They're telling you right in that statement that they are not going to stay in. So while it's good for Bitcoin right now, while that thought's there, if something happens and the value of the dollar goes up, they are getting out. Now, is Saylor going to get out? I don't know. I think at where he bought in, I think if this thing is dropping to 15,000 or 10,000 or something, I think he's an idiot not to have sold out along that way coming down and just bought in lower if he really believes the stuff that he says. Because we're talking about a significant sum of money. I know you guys said they're going, yeah, well, he can just hold it, through the next year downturn, whatever, and go back up. But he's, we're talking about not his personal net worth. We're talking about his business. And I'll tell you what, right now, if his business, everybody's like, oh yeah, great, let's go buy into MicroStrategy because he's so smart. Excuse me. He's only smart as long as Bitcoin price continues to rise. If a flat here plays out, as I'm telling you may play out, he's going to look like a freaking idiot if he continues to hold it. Now, if he cashes out in profit, he's going to look good. But then all of y'all are going to jump on him, and rightfully so, because he said, I'm never selling, right? Don't believe anybody, guys, especially when they got that kind of money. Don't ever believe when they say they aren't ever going to sell. That's exactly what they're going to do. They didn't get to the place they're at by, just holding on to things that decreased in value so strongly. If he really believes in it, then and he wants to have a successful company, he'll sell before he's losing money on it, overall, his average entry. He'll sell before that and then buy in lower. Because what's going to happen is if his Bitcoin holdings are dropping there in the company's value is going to drop, and then the people that are invested in his company, his shareholders, are going to leave. And it's just going to cause his company's value to drop even more. He's not going to do that. Especially if Bitcoin were to come on down here, if this was to be an expanded flat, which means it necessarily has to drop below 3,200. He's bought in between 10 or 11,000 and 20,000 right now, somewhere around there is what he said so far. Yeah, it would be absolutely stupid to hold on to it as it dropped back down there that low. Because again, his company's value is going to suffer. And if your value of your company is dropping, it makes it difficult to get financing. It makes it difficult to get good rates on your debt, or to even shuffle around debt and stuff like that. Stuff that these big companies need to do. This is the reality of what is not being told to y'all on in crypto Twitter right now, where everybody's all emotionally bullish. But here's the thing: you can understand all this and still be long and still be bullish overall. All it means is you're aware of what can possibly happen, so you're watching, you're paying attention. Most of your people there on crypto Twitter are not, guys. On social media, they're not paying attention. Okay? You guys need to understand, just like as I told you, you are liquidity in the markets. You are retail. You are liquidity. Other time frame traders use your bids and your ask and everything to move price, to move their price. You are liquidity. Same thing when you're talking about crypto Twitter, the rest of social media. You are nothing but a pawn for these larger players. If they're out there shilling it, if they've got, these people, and I don't mean to say anything bad about them. I'm not saying anything bad about them. Jason and Pomp and, whatever. Sailor even. I mean, they have a narrative. Their business success and maybe even their personal success to great sums of money depend on price continuing to rise. And so they need you to continue to be bullish, to continue to buy, to continue to do it so it goes up. So they do well. Always be suspect when somebody's, being emotional about something, especially emotionally euphoric. It's easy to get caught up in it. But notice, nothing of what I said here says price is not going to go up or that it's not bullish. I'm just giving you the realities of what you should be paying attention to. Let me see here. Yes, Hank, you missed a good rant. Hey there, Brian. Good to see you. Hey there, TV Canal. Good to see you as well. Crypto Girl is here. Let me kind of catch up with you guys here. Chemo, he says Michael Saylor is probably realizing at least some profits at this point. I mean, it'd be stupid not to. But the other side of that sword for him is that if you look when he posts something. Look at that link I posted up there, what he set up here. Let me kind of talk about this for a minute. Where was that? Where did I put that post at here? If you look at the comments underneath there, this one right here. Look at the comments under here. Saying you are a highly intelligent legend is lagging and can't quite keep up with the sheer magnitude of what you do and how you bring it. You've got people in here saying, and here's the thing, because he said big tech will need to integrate their products with Bitcoin to stay competitive. All companies will need to convert their treasuries to Bitcoin to stay solvent. That's the biggest load of BS I've ever heard, guys. There is absolutely nothing going on right now that says this. The idea that the dollar is just going to destruct right now all of a sudden makes no sense, guys. The world is part of that value. They need it. The governments across the world need the dollar to stay in control, because all the debt and everything else they buy is dependent on that. So, to say that they're going to have to do this to stay solvent is just a bunch of BS. If there was to be some ridiculous amount of inflation, some huge bit of inflation, 10, 20% for years, maybe. But the likelihood of that is asinine right now. It's I don't even know, asinine's not the right word there. It's asinine to believe that this is truth right here. But yet you have people here, and I don't mean to call them out personally, but it's the comments here. It's 100% required. I don't understand why these companies aren't acting sooner. It's a matter of time. It only gets stronger as time goes by. It may, guys, but nothing has happened right now that exudes this level of confidence that that's what's going to happen. Does that mean you can't be long and think about it? No, not at all. But it means you have to be aware that this is a completely emotionally laden sentence, or two sentences here, with no logic at all in it. It's based off potentially false premises, which may make the argument seem legitimate and cogent and everything else, but it really isn't. It may seem logical, but your logic can seem logical even if it's coming off, false premises. All right? Those of you that have taken any type of philosophy are following me here. Everybody else may be like, what are you talking about? But this is what I'm talking about, though. This idea that's coming on like that. And it concerns me for y'all, because here's the thing, guys. I've been doing this for how long? 25 years, right? I've been doing this in stocks, commodities, Forex, and in crypto now since 2017, almost 4 years in there now. So I've seen the ups and downs, the bull and bear markets, and all these different things over 25 years. What is going on here is nothing different. There is the potential, and yes, I hope that we do really well with it. My thought is that we will. Right now, anyway. But if your argument for Bitcoin to go do all these great things that everybody's talking about that he's going to do is because of what's happened in the last 10 years, then you aren't paying attention. Here's the thing. Only now are we starting to see the real interest, the big names, the people that have weight, that have heft, the people that can basically support the market on the move up or be that supply pressure on the way down. These are who we finally have now. So it depends on what happens now. 10 years, the past 10 years, I'm going to be honest with you guys, doesn't mean anything. Because that was 10 years of nobody really knowing about it. Now we've got everybody knowing about it. Now we've got, here in the U.S., we've got regulations trying to be passed to make it a little bit more difficult. Other countries doing their own thing as well. And again, this is what I told you back in 2018 was going to happen. As we became more known, more pronounced. Let me see here. Again, the magic Lord BTC believes we're in a bull market, but yet I just completely showed you that we're not necessarily so. How could we definitely be in a bull market here if the possibility for an expanded or running flat is still there? If those possibilities are still there, then we are not definitively in a bull market. We could be. Like I said, we could be. And so there's nothing wrong with playing it as it's moving. But if you definitively believe that we are in a bull market here, it means that more than likely you're not going to sell when you need to sell as this comes back down and tells you otherwise. And that's what we're trying to get you guys to be careful of. All right? It's okay to look long. The problem is when you start using words like bull and bear, you're starting to bring emotional actions in with what you're saying. So your mind starts thinking you have to be either a bull or a bear, which makes it hard if you're a bull to sell on the way down, which means you don't get out when you need to if it, in fact, is coming back way down here. Right? And so it's the same thing with bears the other way. So if you get the whole bear bull thing out of your head, it makes it a lot easier to actually trade what's on the chart. And that's what your goal should be. Let's see here. Let's see here. You're saying it looks like distribution to you for maybe retest of 20? Locally here, let's see here. We're finding volume right here is where we're finding that volume. This is getting picked up, so that's good. But we've got these lower highs coming in. So until I guess another way to look at this, guys, if you want to look more at market structure here, look for a break above this swing high here. This 23,284 here on Bitstamp. If you can make a higher high off that, then you potentially are turning the trend. Right now, you've got these low, this high, low, lower high, lower low, lower high. At least on Bitstamp right here, not a lower low yet. So if it turns off here and heads up and makes the new higher high locally, then we have a low, a high, a higher low, a higher high. So really, this is kind of your level that you're looking for here. You want to see, does it get above 23,284? That's the simplest way to put it right now. So yeah. Let's see here. What is the 10,000 foot macro view for Bitcoin? Do you even think in those terms, 7 to 10 years? Sure. I think it's definitely possible. And hey there, Ari, good to see you. Yeah, again, guys, if you are new, if you haven't been following me, you don't know. But, my idea is that we're going to get 6 figures and more. The question is, do we do it here or do we do it from here up? I'm going to tell you right now, the most bullish thing you can see, and this is going to completely throw a lot of y'all off, is if we were to have an expanded flat correction and come on back down here. Maybe even to $1,000. Recheck this previous swing high that's never been tested before. To come down below this 3,100 would be, as an expanded flat, would be the absolute most bullish thing that you could get here. Why? Because it sets it up for a stronger, higher, further move up. Right here, it's limited. If you go in here and you talk to people, you're like, okay, well, what is your count? Most people look in here with their count because they're looking on these other charts that don't go all the way back. Let me see here. Nope. Looking for BLX. There we go. And so what they'll look at is their counts. Let me turn the weeks here. There we go. Their counts usually begin somewhere right around here. The reality of it is the count starts way down here, though. And if it starts way down here, then it would appear to be a 1, 2, 3, 4, 5. So this would be wave 1, which makes this wave 2. Again, now it's not necessarily a huge thing that it hasn't, retest this level here. As you can see, didn't really retest this level here either. So that's not the biggest thing there. But to have this play out means that this drop here would remove the rest of the excess. It would remove everybody that's just the people you see right now that are just beyond giddy with themselves about how price is. Price does not move up at the beginning of a bull trend on euphoria, on excitement. Price starts where everybody believes that it's dead and done, and that's all there is to it. The giddiness and excitement come at the very top. Think here, or here, or heck, even here. And so to have this come up here, the most bullish thing would be that pull back as an expanded flat to completely flush out all the people that are definitely not going to hold. Because as long as you got people that are in there that may sell, that is potential supply pressure. This is what you guys need to understand. And it becomes more important when you have bigger people, because they have a lot more that they control at one point. Retail is retail. Retail, it's not like Jim and Jane and John and everybody calling each other up. Hey, let's all sell at $25,000 or something like that, right? So each retail, holds just a little bit in the grand scheme of things, and they don't work as a group. Whereas your larger players control a lot more at one point. And remember, what I told you about markets is it's all about nudging price. All you have to do is nudge it in a direction and retail will jump on it. Okay? That's all you have to do. So again, could this possibly be the bottom? Sure. This would have to be an ABC. Okay, that's great. That's what we think it is, right? But if this is an ABC, this is pretty clear ABC right now. Which means the possibility, whether you like it or not, whether you want to hear it or not, whether you want to be emotional, it doesn't matter. Price doesn't care about what you want. Charts don't care about what you want. Okay? So there is a strong case to be made for a reversal in this area to come on down. We'll see if it does. Either way, I'm making money, which is great. I've talked to Discord the other day, and I gave him a screenshot of my last buys that were in there, around 16.7 and 16.9. Back when we had, let me get back over here. Let's see here. Where's that? That was, I've got a two-short here. Right here in this area. I gave him the screenshot from the exchange. So, I'm not just saying it. But that was my latest buys. And I'm long even with my macro idea. It's possible to do it, guys. Stop thinking you have to be, just that one way or the other. All right? Let me see here. So yeah, that's kind of where we're at with that at the moment here. I'm just kind of catch up with you guys here before I go any further here. Sorry. And let me see. Hank says that's still his expectation, expanded flat. Okay. Let me see here. Crypto Mowgli agreeing that would be the dream. Beautiful opportunity. Exactly. But here's the thing, guys. If you're getting down here, and I don't mean this to be disrespectful to any of y'all. I don't mean to be rude or anything. Very few of y'all will buy down here. Or heaven forbid it gets to 1,000. There's a very, very, very few of you that are going to be doing that. And that's okay, because it's the same reason many of y'all never bought down here when we were telling everybody to buy down here. Or right here when we were telling everybody to buy right here. Because human emotion is what it is. And it's scary to buy when price looks like it's going to continue down forever, right? So these are things we have to pay attention to. The likelihood is most retail will sell at a loss on the way down here, especially if it breaks down below here. See, the thing is, with this 3,100 area, if we get a breakdown from that, that's the people that have been holding here are most likely going to sell. Because they're going to get upset that they had this chance to have this profit, no matter where they bought in this area here, and they didn't take it. And instead, it's back down here where they've been for years now. It's never going back up. It's going to die. That's the end of it. That's going to be the thought process. Going below here also puts these people on notice. Now, some of them are going to hold, but there are going to be people that have purchased in this area here that are going to sell, because if they're here, they're going to want to lock in profits, some little bit of profit. It's been years. This is 2017 till now. It's been almost 4 years, 3.5 years. They're going to want to lock in some profit. Others are going to be, again, have got in over here and it's now there and they're going to lose money, so they're going to sell out anyway. Very few people, and that's what you're looking for. That's what you're looking for, guys, when markets move. Okay? Is it possible? Yes. Is it likely? Not. Again, you're talking emotionally. This is what I'm trying to explain to you. Everything you're saying is wholly emotional right now. You can, like you said, you've been a bull since 10.5. You're a bull. It's going up. Blah blah. I mean, these are very emotional positions you're taking. And I hope you said that you're going to buy dips until you're proven wrong. I hope that's true. For most traders, it isn't. I mean, that's just the reality of it. Yeah, I'm going to cover the DXY here as well, and a few other things. Hank says DXY high to the mid 80s. They'd be selling grandma again. That's an old thing from what I said probably a couple years ago now, right? Mads, my limited upside, if this is a wave 3. Oh, if this is a 1, 2, 3, this should have some good upside. I mean, if I'm looking at here, if this is a wave 3, we should definitely get above 30,000, I'm thinking, with it. Yeah, if this is a wave 3, we should get above 30 for it, I believe. So yeah, again, if we just look at where we are right now, if this is a 1, and this is a 2, and this is this 3 building up here. Sorry for all the other stuff I've got kind of on there. Just want to show you real quick though. This wave 3, we usually look for the 1618 as the wave 3 extension, right? So that's right here at 21,243. So we've done enough to have 3 waves up right now. We've done enough. But if this is a 3, then I expect this to really push on up well, up toward 30,000. Potentially 32,000, maybe even. Get us that 2618. The 2618 is at 32,000. I wouldn't be surprised to see that if this is a wave 3 coming up here. Yeah. Let's see here. So anyway, that's what we're kind of seeing there. So things to look at right now real quick here, and then we'll move on to some other things we're looking at. Make sure that you understand that the H4, the 4-hour time frame, R5 pivot is just above us here, just above 24,000. So we've run the pivots basically. If I'm looking locally here, just eyeballing it, looks like a 1, 2, 1, 2, 3. Actually, 1, 2, 3, 4, 5 would give us then a 1, 2, 3, 4, 5 up. And so that's what I'm kind of looking at right here, guys. Right here. So, if we're bouncing off here and heading up, I mean, again, I can see this as a triangle. We get this just slightly higher high. That completes this larger wave 3. Larger wave 4 comes down. Larger wave 5 then goes up here toward, 26.5 maybe. Doesn't have to go that high. That's just the 61.8 projection. Again, we still have this pattern target based on the ascending channel here that has a target of 25,300. So I think we've still got further upside. I don't think this is the top right here. I think, even if we're pulling back a little bit right here to 38.2 or even the 50, I think overall this is just an interior 4 of a larger 3 right now. I have a little bit of issue if it dips back down below this support. I think a good place for it to hit the 38.2 from where we're at here basically be a sharp drop down. Sometime today we could get there and bounce off that channel resistance as support and head up. And I think that would be the best thing that would happen there. Dropping down below it always gets me iffy because it means that that support or that resistance isn't as strong as what you're normally looking for. So, yeah, we've got that. Let me see here. Along with Tellurrider's question, I missed his question. In today's environment with the driving forces, let me see here. In today's environment, with the driving forces that would get Bitcoin to 1,000 or 2,000, how long do you think we'd have to buy at those levels? Would Wix into existing limit orders be the only op, or would Goblin Town have some staying power? Goblin Town. I think if we're to break down something like that, guys, I don't think we'd spend a whole lot of time down there. I think, you kind of move it down, And I think the move down below the swing low here would be limited in duration. I think it would be, whether it's something like this, a week down and back up or something, maybe something like that. I don't think we're going to spend an extended period down below. In terms of the structure here, it would just be a spring below that swing low. And so we'd expect it to come back up. I don't think it's going to spend a significant time down there. But I think what it does is it comes back up toward this 3,100, which now becomes a little bit area of resistance. So the quicker it can bounce and get back above that, the better. But then I think it just kind of cruises on up, not overly excitedly maybe, but it does kind of just make its way up there as everybody continues to say, oh no, it's going to go down again. Look what it did to us here. It did it here. It did it here. It's going to just do it again. It's the end of Bitcoin. It's a dead cat bounce. It's going down. I think it would be the way it would be. But that's the attitude that you're looking for in the market for price to rise. Remember, as long as you have people, like most of y'all who are willing to trade, we say weak hands. Weak hands doesn't mean that that you don't know what you're doing. Weak hands also refers to traders, people who are into and out of positions. Why do we talk about that? Because those weak hands add to supply pressure. And the larger a trader you are, the more supply pressure you can put into the market at any point. So let's go ahead and get on to the DXY. So here's the thing. If you've been following me, I'm bullish on the dollar. Everybody's talking about inflation, yet I don't think most people understand how it works. I've tried to explain it a few times. Yes, dollars printed. No, not in circulation. If there's not dollars in circulation, well, there's no real movement of it. Beyond that, you've got credit contraction. So you've got actual business and personal credit contracting. Why is that bad? Because if people are paying down the loans they have, or they're not taking out new loans, then there isn't an expansion of dollars. You create dollars through creating loans, through creating credit. That in a nutshell, that's how dollars are created here. So if you're not creating more dollars, you're not inflating. If you're not inflating, and instead you're deflating because you're paying off those loans, you're not taking on new credit, that's less dollars out there circulating, less dollars around, which means the dollars become more valuable. They become worth more. And if they're worth more, then that means any asset is going to be worth less necessarily, because it takes less dollars to pay for it. So if you look at the DXY here, and you see what's going on here, and you've got this move, and you're like me, and you're thinking, hey, it looks like we're going to come on down there, and we're going to head on back up. This is deflationary. So if this happens, go back to what I said about all the big people coming in right now who are saying they're coming in because they're worried about this. They're worried about this. That's why they're getting Bitcoin. Because if this happens, then necessarily everything else held equal, not even new money coming in, Bitcoin should do this. Exactly. I've been talking about the DXY correlation since 2018, since I started doing the YouTube stuff. This is why the big money's coming in. Because necessarily Bitcoin's probably going to do this. But if it doesn't do this, if the dollar does this, then necessarily, all things held equal, Bitcoin should do this. And if the dollar's doing this, then those people who are coming in saying that we're only coming in because we're worried about the devaluation of the dollar, and the dollar actually increases in value, they're going to get the heck out. They're not going to let $750 million sit in an asset that's dropping by 50% or more. There's a lot of stuff going on in social media right now, guys, with crypto, Twitter, whatnot. If you do not have an economics background, if you do not have a financial background, if you don't understand the way in which all of this comes together, then you're going to fall into these traps of what people are telling you, because it's other people telling you the same thing, but they don't know any better. So they don't know any better. They're telling you it sounds good. You don't know any better, so you believe them. And then what happens? Everybody gets caught, right? Everybody gets caught with their pants down, right? Except for the few that don't. That are paying attention. So we've got this going on. We've got COVID coming in. You've got countries locking down again. We've got Biden coming in as president. We've got Trump potentially not leaving the White House, having to be escorted out. Man, what an end to 2020 that would be. But anyway, Biden coming in. Biden's made it clear that he thinks we should be on lockdown. Minimum 30 to 60 days. Businesses that are barely hanging on by a string right now because of the lockdowns and all this other nonsense that the government's done over the last year, there's no way they're surviving that. They're going out of business. Again, you have business bankruptcies. You have real estate that goes unpaid. You have foreclosures. You have repossessions. All of this decreases the value of things. Now, I'm not saying a potential debt, deflation spiral, but, you got to pay attention. I know I talk about things here a lot of times that most of y'all don't understand. I get that. Hopefully that's why you're here, to listen and maybe learn a little bit, and then to go into, and look up some real information online and kind of get better informed about it. Because there is a serious lack. I see people on here, they always talk about, U.S. schools should be teaching more about finance literacy and economic literacy and all that in school. And these are the same people saying they're using that as their reason why Bitcoin has to go to 500,000 or a million or something. Because supposedly they understand something that people don't. But again, if you are of the belief that the dollar is just going to die here all of a sudden, I don't think you're being very realistic. Not at all. Again, the world runs on the dollar basically, guys, whether you like it or not. All right? Aramis, hey, I appreciate it. Glad you're liking what I'm saying here. Just as a framework, just as things to look at and understand as it goes there. I think too many times new traders come in and they think that they have to be guaranteed what price is going to do. They have to be they have to get in and know that price is going to go up if they're long, or go down if they go if they're short. But the reality of it is, this is what trading is, guys. It's understanding how all this plays together. You can trade shorter time frames on the chart. Sure you can. I'm a big proponent of that. But if you really want to understand, if you talk about Bitcoin as some next financial evolution, you absolutely have to understand all the rest of this. Because if you don't and you're still saying that, you're talking out of your rear end. And nobody has time to listen to somebody talking out of the rear end. That's how you lose money, guys. My goal here is not to make you happy or to make you give you warm fuzzies in your tummy. If I do, hey, that's great. But really, what I do here, guys, is to try and get you to think beyond the one-liners and the memes and all the misinformation or half-truths that are constantly thrown out all over social media, especially crypto Twitter, as fully on truth. You cannot do that, guys. If you're here, my goal is, if you're here, that you're going to be able to be a successful trader for a long time. So I'm not going to give you stuff like that's nonsense or purely emotional. But again, I need to make sure you guys understand, so I don't get silly comments from any of y'all. I'm not saying price is not bullish right now and that it can't go up. I'm saying we are at this juncture right now, this $1,000 range right here, that you need to be paying attention to. Okay? That's all it is. Let me kind of catch up with you guys here. If we are at wave 3, where would you expect wave 4? Wave 4, we always look for an initial 38.2 pullback. So you measure out wave 3 and you look back 38.2%. Now, if it's a really short wave 2, it'll hit the 23.6 and it'll bounce there. Most of the time, wave 4 reaches the 38.2, bounces there. Sometimes it overextends and hits the 50% retracement of wave 3. But remember, at the end of the day, wave 4 is valid. Even beyond that, wave 4 is valid as long as it doesn't cross into wave 1. Unless it's an ending or a leading diagonal. Oh, excuse me. Hiccups there. Sorry for that. Let me see here. Edward, what's going on, man? He says, if we possibly topped out, how do you think we will go to? Oh, how low? How low? Sorry, I can't read. Again, I'm not going to say. Here's the thing, guys. Let's say we were to get up here to 25, 26 and retrace, right? I am not going to say right now that's definitely the macro top. I'm going to treat it like it's a wave 3, and I'm going to look back. So if I'm looking at that, what am I going to do? So I'm going to look at this. And I'm going to look locally here first. Again, the idea maybe we got a 1, 2, or a 1, 2. God, let me get into the right time frame here. Where are we at? I'm going to look locally here first. So if I'm looking at this going, okay, 1, 2, and then we'll have, 1, 2, 3, 4, 5. So 1, 2, slightly higher high for a 3, pull back for a 4, at a high here for a 5. So if we do that, I'm going to look at this first. And I'm going to say, okay, if this is a full wave up, I'm going to look for price to return about 61.8 to it's Bitcoin, usually 70.5. So measure this out, and if it gets up, say up here to the targets up here, say around that 25,000 area, then I would look initially for price to come back right around this high volume node. So that's this, it's basically the 61.8 to the 70.5. So basically almost 18,900 to 19,700 kind of area right there. That's where I would look for it to go. If we're dropping impulsively, continuing through there, and depending what the count looks like as it's coming down, well, then we back out another one and you go, okay, well, maybe this is wave 5 of a wave up, in which case then you're looking at a larger wave. And so, again, you'll get out over here. And from that point, you'll look at this and go, okay, well, maybe this is a 1, 2, 3, 4, 5 or something, right? Yeah. And so if you're looking at that, if you're looking at this as a 1 then, so maybe you're looking at this as a 1, 2, 3, or maybe you're looking, whatever you're looking at, if this is a termination of a larger wave, well, then I'll just look further down then. Same idea, looking at that 61.8 to 70.5. So at that point, it starts getting you down there around that 14.5 to 15.5 kind of area. What I don't like about this is there really isn't anything going on. I mean, there's a little bit going on from back over here. But now I'm interested, if we're getting this point, how is price reacting to this previous level here? That's what I'm looking at. And so that's how I'll play it. I'm not going to sit up here and go, oh, it's definitely going down. I'll say, and depending on how that reversal is, I'll say, okay, now we're looking at the possibility of that happening, and here's kind of where I'm looking to go. But it all depends. Does it follow through? Does it make it all the way? If anything happens along the way, it could change, what you're looking at. Let me see here. What is their argument for inflation exactly? It rather confuses me. Do you see any other possible inflation over? So basically the idea of inflation is just QE. Money coming in, money being printed. There's more money printed, okay? That's the idea. And that's valid if that money makes its way into the system. But here's the thing, guys. The way QE works is basically, let me see if I can do this real quick here. Let me see if I can write this up here so you can see it real well. Let's say they put $10 trillion. Whoops. Let's say QE is $10 trillion, right? And they put $10 trillion into the market. Or they print $10 trillion. The way QE works, basically about, I don't know, probably about 60 to 80% of that, I think, is where it's at. That goes to the Fed Reserve. Okay? So now, and I'll explain that in a minute. So now, out of that 10 trillion created, you maybe only have 2 to 4 trillion actually entering the market. Okay? I said Red Reserve. Fed Reserve. There we go. Now, why do they put this money in the Fed Reserve? They put it in the Fed Reserve. If you guys have been following me, you know what I've told you. The Fed doesn't actually have the power to do anything. All they can do is try and convince you to go out and take out more credit or not to take out as much credit. So how do they do that? Well, they go to the banks and they say, listen, we've got this money, this $6 to $8 trillion in our bank. And so what that's going to do for you is that's going to give your bank reserves that you can now use. Because as a bank, you have limits on how much money you can give out. Remember, it was only this year. Up until this year, the banks had to hold 10% of their deposits. They had to always have at least 10% of deposits. The Fed earlier this year said, don't worry about that. Which means banks could dip down below that 10% for how much they had to have on hand. Okay? However, when you're making loans, it's required that you have reserves to do those loans. So the Fed says, okay, we're going to take this money, we're going to put it in the Fed Reserve vault. It's not entering anything. It's just sitting there. It will not enter. The idea is that it gives the banks the ability to loan now. Remember what I said earlier, credit creation is or expansion of credit. Taking out new loans is how new dollars are created, okay? So this is supposed to encourage banks to go out there and loan to people they wouldn't normally loan to. Why do we know that? Because we know that credit has been contracting all year long. That's why the Fed Reserve did this to begin with. Because the people who could take out loans weren't. The savings hit an all-time high in May of like 30 somewhat percent. All-time high in savings. So people were saving and they were not taking out new loans. And not only were they not taking out new loans, they were paying off the ones they had. So you've got credit contraction to a magnitude, coming in. So Fed Reserve says, listen, here's your reserves, banks. Go ahead and loan out money. Give it to people who you wouldn't normally give it to. Lower credit scores, maybe questionable ability to pay. Because the other guys that you would normally loan to aren't coming to you for it anymore. And instead, what the bank said was, nope, hey, no way, man. This doesn't look like a good environment. I do not want to be stuck holding the bag on this. Because we saw what happened to Lehman, which, of course, Lehman's a different type of bank. But nonetheless, we see what happens. You pick favorites. I don't want to be your non-favorite when that happens. So not only did they not start adding out more loans, but they started making it more difficult. They started raising their requirements to get a loan prior to what it was. So now they're making it more difficult to get credit, which means more difficult for credit expansion, right? And so the money just sits there. So everybody's like, oh, all this money's been printed, all this money's been printed. No, most of that money's sitting in the Fed Reserve right now, untouched. It's not going to be touched. It can't be touched. It is there precisely to give reserves to the banks so the banks can create money. That's how it happens. The banks are like, man, F you. I don't want to deal with you, man. Nope. And so that's where we're at. So yeah, a lot of money goes out there or is printed, but it doesn't actually get in the market. So everybody's just kind of paying attention. They say, oh, look, all that money's created. That's all it is. Now, if that new money hits the market, yes. If it's out there and it's moving around, yes, it is it has an inflationary effect. But if it doesn't, printing it doesn't do anything. It's just printed. It just sits there. So that's kind of where we're at with all that. Let me see here. Oh, let me see. Let me kind of catch up with your Edward. I appreciate the nice words there. Thank you. Let me see here. Kind of catch you. What do I think of the CME gap at 10,000? I'm gonna gasp. No, because you said gaps. I saw that. Yeah. Historically, here's the thing. No gaps ever have to be filled on any charts, guys. Okay. Historically, CME fills its gaps. That's the only gap the CME has that hasn't been filled yet on the daily. So that's still possibly, I would say if price was coming down, that's a good target. And it's at 9,600 or so, 9,700. So, again, I think it's something that could potentially be touched. But the market doesn't have to fill it. Right. By the way, Telluride is saying they're not going to be a vaccine first adopter right now. In case you guys don't know, please look it up. These vaccines are being released under a specific government mandate, which makes the producers of them not liable if anything happens to you. Okay? This emergency rushing out of the vaccine, it means that if there is some side effect, they are not liable. They will not be held liable. You cannot sue them. You cannot sue the government for it. You cannot sue your employer if your employer says, listen, you have to get that shot to continue working here. And you get that shot and then something happens. You cannot sue your employer. You guys just pay attention to that, all right? How crazy would that be? You want to think what's going on here? All these vaccines going out? 2-3 months down the road, we start seeing real bad side effects coming out from them. There's your market tumbling right there. But that's just another crazy thing to think about. Let me see here. Let me kind of catch up with you guys here. Yeah, QE, and here's the thing about QE, guys, and even the stuff that I talk about in terms of the larger macroeconomic, what's going on, there's no guarantee that what I'm saying is 100% correct. Just as there's no guarantee that what the government is trying to lean on is absolutely correct. Remember, under Bernanke, the government believed that you couldn't have record low employment rates and deflation. And yet we had it. You know, here in the last 10 years, we've had that. So it's thrown everything. What they're doing here with QE is new. It's not even exactly what Japan did. Everybody's like, oh, but Japan's been doing QE for 20, 30 years. No, it's not the same thing. It's a different version of QE. We don't know what the effects are going to be overall. Nobody does. It's a crazy thing. By the way, did you know that the Fed actually has a person in there that they hire specifically to give them the bad news of what they're thinking about? So if they're like, oh yeah, we're going to do this and it's going to create all this goodness, this person actually goes in there and says, yeah, but this is probably going to happen. Or this could happen. It's kind of like their check. I want that job. But anyway, I don't imagine they're a very popular person there. Let's see here. Chris is literally all of our rich dad. Oh man, I love you guys. You're great. You're great. Let me see here. Tellurider's saying, as far as credit goes, they have an 800 credit and a big down payment and can't get a mortgage. I remember what happened last time they told me that years ago. I think I'm the retail canary in the mine. There's a lot going on, guys. A lot of possibility there. Let me see here. Chemo says UBI is a quick jump start toward inflation. Only if people spend it, man. Only if people spend it. If people continue to save. But you say a great jump start toward inflation. Well, here in the U.S., you know, again, it's against federal law for the Fed to actually give out direct payments like that, UBI. Now, they'd have to go in there and they'd have to change some stuff in Congress to do that. But right now, it's against the law for the Fed to actually provide direct payments. But even with UBI, a universal basic income, people actually have to spend. If the money comes out and then it just goes under the mattress or in the bank, again, there's no money being spent. The whole idea of anything the government does is to try to get you to expand, to get the economy to expand, to get credit to expand, because it's a debt-based economy. A debt-based economy necessarily has to have credit expansion. It has to have that inflation. Because if it doesn't, that means you're buying debt. If your dollars, for instance here, don't become worth less in the future, then you're paying your debt with current dollars or with more expensive dollars in the future, especially deflation. That's why government's so scared of deflation, because it makes debt unattractive. The whole idea of a debt-based economy is to have inflation going so that way people buy the debt and continues this perpetual cycle. But when that dries up and there's no more credit expanding there, and you get deflation going the other way, debt becomes more expensive. And again, in terms of the world, the ones that are hurt the most on something like that are your emerging economies. You know, the Fed had a huge problem back in March with this liquidity crisis right here. This was March. and you had a run on dollars. Everybody wanted dollars. They needed them. So again, the idea that if this is a macro bottom here coming up, and we're going to see something more than this coming up, and so you're going to have credit crunch again. You're going to have that again. So, but this is the thing that people want to ignore. These are the things that they don't want to believe because it makes their narrative difficult. It makes the idea of the roaring 20s difficult again, right? Telluride says, UBI, what if they paid it in digital dollars that are tagged with an expiration date? You have to spend it or lose it. That would be the way that they would have to do it. That would have to be the way if they wanted any chance of making that work, I think that would have to be the way they would do it. That they would need to. You have to give it an expiration date. Remember, guys, when your central bank drops your interest rate, the interest rate to below zero, what they're doing is they're trying to encourage you to spend money, to not keep it sitting in the bank. Because if the interest rate is below zero, you have to pay the bank money to hold your money, right? So the idea is that you don't want to hold that much money and you want to spend it more. That's why you get negative interest rates. So the same thing right there, what Telluride was talking about, if you put an expiration date on those dollars, it might cause you to go out there and spend. But think about what that's really saying, guys, at the end of the day. You're basically saying, listen, we want people to overspend and overconsume and overproduce. That's not healthy. At some point, people are going to get to say, no, I'm not going to spend anymore. I don't have anything left to buy. I don't like where this is going. I'm concerned. Something like that might actually work more toward asset inflation even. Think about it. If you don't want to just blow your money, if you want to keep it and hopefully retain value of it, what are you going to do? You're going to stick it in something that you hope increases in value, right? You get more of the wealthy get wealthier and the poor get poorer. Yes, even with that. I think it's their best chance to potentially get it going, but I think the societal and personal losses that we would attribute to that, I think would be a lot worse. Last Samurai, what's going on, man? Are stocks heavily manipulated? All markets are manipulated, and that just means that those with more heft and experience are able to nudge price around. Does it mean that somebody can go in there and say, we're going to buy all this here and sell all this here and make the market go this price and that price? No, not really. It's more about getting movements started at inflection points, at pivots, price pivots. Yeah. So, if you control a large bit of the asset or a large bit of cash, you can overcome what retail is doing individually and kind of get things going. And like I said, retail will jump in and push and do things. If y'all ever study order flow, that's what it is. Your other time frame traders, it's a good explanation of how other time frame traders use retail as liquidity to move price. So, yeah. ICG Champ, what's up? You talking about monetary velocity? Yeah, we definitely need monetary velocity. We do. We need that. You need that that movement between different hands to continue on there. Sure. Let me see here. So, and then remarks like Elon Musk there. I'll take Tesla off the market at 420. Yeah, that was clearly, that could pretty easily. I don't know how you don't see that as a form of manipulation. Yeah. But that's why the government has the laws against insider trading and all this other stuff. But most people that do it just get a slap on the wrist, right? Look at what JP Morgan does. Look how much they've paid in the last year or two. I don't even know how many billions of dollars in fines they've paid the last 2 years for gold manipulation and a few other things. That's all it is. You guys, man, if you were manipulating the market, you'd be in jail. Not Goldman Sachs, though. Because it's a part of the whole machine. That's the way it works. Too many people have too much money with them. By the way, notice here, we've got this bullish divergence still from the end of July to recently here on the daily. I'm thinking this may be 3. If we've got a 4, we may see it pop up there about 98.8 or so. I think just the 23.6. I don't think the wave 5 would pop down too much lower than it overall. So again, still looking at this kind of range area we're still at there. I don't think this is 5 though. I don't think this is 5. Like I said, I think it's just an interior 4. We've still got a 5 still to go there. But again, when the DXY reverses, especially if you're getting something like this, you're going to have the same thing you had back in March, guys, with all the markets, okay? You're really going to have to be, understand that that's what you're going to have. Let me see here. Let's take a look at a few stock charts here real quick. Just jump over here and look at Bitcoin real quick here again. Yeah, nothing really changed on that yet. Let's see here. The NDX, that's the NASDAQ. I have got an ending diagonal going on here. Potentially completed. Price cannot go above 1285. 1282. Sorry. Price cannot advance beyond 12,825 there. If it does, it makes wave 3 the shortest. Right here, wave 3 the shortest, and that's not allowed. By the way, this is also within a larger wedge here. So, this right here. Potentially. Fifth wave here. So that's what I'm looking at there with the NDX, with the NASDAQ. Remember, guys, I pointed this out earlier this week. The 3 most crowded trades right now. The most crowded is long technology, which is why the NASDAQ is continuing pushing up here. The second most crowded trade right now is short the dollar. The third most crowded trade right now is long Bitcoin. All right? If you don't understand what that means, crowded trade means you are 2 off sides on one way or the other. So basically, you could say, okay, well, long technology is the crowded trade right now. Basically, what you're saying is probably 80 or 90% of the people are long. Again, if you're long, if everybody's long, then who's left to go long? And that's usually where you get those strong reversals. The dollar bears are the second most crowded trade. That means, maybe 80% of them, 80, 90% of people are short the dollar. Again, historically, anytime that's happened, dollar pops right back up. And again, the third one is crowded trade, long Bitcoin. Now, we don't tell you these things to say that reversals have to happen, but what you say is so that you're paying attention, so that you know that these things are here and they can potentially happen. I think that's where a lot of, I really appreciate you guys here. I don't see too much nonsense coming from you guys, which is absolutely fantastic. It means you guys are thinking. And I really appreciate that. Because again, guys, I don't have a lot of respect or time for people that don't think. I'm a busy guy. But yeah. So, again, guys, to be a good human being or to be a successful human being just in life is the ability to listen to things that you may not agree with, especially if you're emotional, but still be able to listen to them intelligently. Doesn't mean you have to agree. But especially if it's in a subject matter of which you really don't have experience or education in, yeah, you should really pay attention to it. Again, it doesn't mean you have to agree. But a sign of an intelligent person is somebody who can actually listen to the other side of an argument, especially if they're emotional. So yeah. Let me see here. Let me see. If you can't see a big future for Tesla, I think you're blind. Oh, it's got possibilities, sure. But you got to be careful with that as well. History is riddled with companies similar to Tesla, that have gotten to that level and then just all of a sudden disappeared. So always be careful with that for sure. Let's see here. The other thing you have to understand about Tesla right now is it's seriously overvalued. Yeah, compared to what they're actually making in revenue, it's just an absolute ridiculous valuation. And, you know, usually when you have things like that, you're going to have a strong correction off it. You know, it just is what it is, guys. But here's the ES. Here, the CME minis, E-mini futures. Again, ending diagonal. We've dropped down through support on volume and candle spread. We're now below the channel EQ. Target's the bottom of the channel here. If we drop out through that, the target becomes about $60.75 below the point of breakdown. That would take us below wave 4, which adds a whole lot of confidence to the idea that this is the top here. Okay. Let me see here. Real quick here with the Dow, real quick, because, you know, again, guys, these are 3 different indexes. They track 3 different ways. So you always want to make sure you're watching all of them to see kind of what you're doing. Right here, it looks like with a slightly higher high, might have finished another ending diagonal. Right here around the R1 pivot. We're looking for an impulsive decline and close below this support. You see how it declined and then shot back up? We're looking for a decline and close and continuation. Further decline here below wave 4 at 28,902 right here would add a whole lot of confidence to this count. All right. Let me see here. Oil real quick. I see something for ADA USDT, I think is what I saw there. Am I correct? Let me know. I think I saw it somewhere on there, but I can't find it moment here real quick. Oh, there it is. Yeah. Let me look at that in just a minute here, okay? Let's look at the ones we usually look at real quick here that everybody's interested in. Oil. Oil's still following our path up right here. We've got a wave 3 target at around $50.18. Wave 5 up here at around $51.25. And that will potentially complete wave 1 of the larger wave 3. But I'm going to tell you right now, there is the possibility. I'm looking at another account that suggests this is 4. Oh, I'm sorry, this is 3 here actually. This is 4, and this may be 5. And that would align with my other idea, which is that we're going to get another shock below $0 kind of contract going on there. You know, kind of like we had back in May with WTI. So we'll see how this could be playing out. For right now, we'll look at this as a 1. And then we'll look for a pullback on a 2 and see if we get that. Gold. I know you guys have your opinions about gold. Some of you love it. Some of y'all think, it's so stupid. Bitcoin's going to take it over. I don't mean that to be disrespectful. I'm just having a little fun, guys. Right now, I've got this as a potentially a 1-2-1-2. We've retraced. We've almost hit the 70.5 retracement here, and so that's kind of where I'm at with it. If we, you know, we're kind of sitting heavy on this this channel EQ here. If we lose that support, that would take us right here below wave A, which starts making us lean toward it being wave 2 and done. Target would be the descending channel or the ascending channel support. If you drop out of that and get below the wave B here, that's going to add a heck of a lot of confidence to this count. But really, you're looking, you know, overall, these are the levels you're looking at. You're looking at a drop below wave A, drop below the channel support, drop below wave B, and then drop below wave 1 here. And that's what you do it on. If this is wave 2 here, 2 of 3, whatever there, that wave 3 target, wave circle 3 target is a minimum of 1579.60. And wave 5 minimum there of 1503. Remember, my view on gold still remains that we're going down to about 800 or 900, somewhere around there. Same gold view I've had for a while now. Let me see here. Let me see if I can find my ADA chart. I think I did this just recently. Give me just 1 second there. You've been very patient. I appreciate you. Thank you so much. Let's see here. There we go. Let's see where we're at. All right. What do I have for ADA right now? For ADA right now, there we go. Let's see if we can kind of get this chart on here for you. By the way, this is TradingView's new desktop thing here. So you can get them off your browsers. Those browsers charts are very RAM intensive. It seems to be a lot better with what we're doing here with this this standalone application they have. So for me, ADA USDT here. This is the 4-hour chart. I like this as a channel. Look where this EQ is. It works really well as support and resistance. Right prior to that, we had a rejection, a bounce back, and then a shot through there on volume right here. And candle spread pushing up through there. And so we might have a pullback toward that support as resistance, or resistance as support. And then it goes up. But nonetheless, the target here is about 0.06904 above the point of breakout. And that's based on the height of this here. The height of this this channel right here. So yeah, I mean, locally here, this is what we're looking at right now. You know, that gives you what? About a 44% increase on that. If we zoom out a bit, let's see here. If we zoom out a bit here, how would I look at this? I'd probably look at this channel first. Potential channel, this support right here. If you're losing that, I think you risk the run of some downside. You can see that we got rejection right there around the EQ. Let's see here. So yeah, right here locally, I mean, if I'm looking at this, I mean, let me see here. Here maybe a 1, 2, 3, 4 here, and we're working on a 5. So that 5 up there around, where are we looking at here? Almost at the R5 pivot here, almost running for the full pivots on the 4-hour, right there around 22.5. So 22.5 takes us right up about to the EQ here. So I could see that as a 1, 2, 3, 4, 5 maybe. So that would get you a 1 and then a pullback on that. Sure, I could see that. As far as the bigger, really big picture goes, though, the macro here. If I'm looking at this way, here's what I would normally do. I would normally take this like this. See, that doesn't work for me. So we're going to have to maybe look at like this here. Let's see, right there. See, that works really good. The EQ on that works really good as support here. So let me kind of pull this down a bit here. Let me get this in. And I can almost get it there. There it goes. So, I mean, that works really good as support there. So if I'm to look at this, I would be thinking along the lines of this target right here. You know what? I'm going to be a little bit more, not quite as out there with it. We'll go with this one. After the first touch of support and resistance. And that would then get us this right here. And so a breakout of that gets us, I mean, look at it. That's where we are. We've already hit that target. So we're set on that as well. You know, the question is, what are we doing here? Again, if Bitcoin does this thing, guys, here's the thing you have to understand. If Bitcoin does the thing where it pulls and heads back down, everything else is going to come with it as well. For the most part, you might have a lagger out there or two that doesn't. You know, in 2018 it was BNB, 2019 it was Link. But, you know, in general, alts are basically going to come down with it. There's another way maybe you can look at this here. See, look at that. Oh, man, that's interesting. Look at how well this works here. TradingView would be nice if they added some functionality to the app. So far for me, it's a wash, but I don't have nearly the number of charts that Chris has. Yeah, no. It definitely helps me there, but no, I agree. I would love to have an easier way to just to pull off the charts. You know, like in Discord where I give you guys those live charts. I can't do that with the with this thing here because I can't grab a link for it. So that would be nice. But look at this. This is interesting right here. Look at this. So swing high, swing low, swing high. It's kind of all in this same area right here. I think this is interesting. This EQ works out pretty interestingly here as well. Yeah, so if we were to drop through this ascending support here, I'd probably be looking at this ascending EQ. And to me, that makes a lot of sense. I think we'd probably hit this area right here where this HVN is. So that's the R1 pivot, basically, where it sits right now. So if it were to break down at some point, just so you guys are aware, if you're trading it or you're thinking about trading it. There we go. If it were to break down, let's say it gets up here anyway, and then it breaks down through this. I mean, I'm probably looking at it getting down around this area here, right in this area. Now, does that mean it goes up from there, or maybe you stop and then further down? I don't know. If it's come further down, I'd definitely be interested in this higher volume node here. So the two nodes are there at 0.08240 and 0.04198. I mean, big picture, that's what we look for. But if I'm looking at channels and we break out of this channel, break down from this channel, I would normally look at the channel EQ. If we break down from that, I'd normally look channel support. If we're getting down here, we've got this demand structure down here that I think price would really kind of need to hold. But that really kind of takes you way down. I'm not saying it's going to get down here. Don't freak out, guys. I'm just giving you a heads up, longer time frame. Look at all this. The areas that I would be looking in general for support as it's coming down there. So, yeah. So I think it's kind of iffy right now. We'll see if we get the break on that right here. This is the supply structure up here. Let's see here real quick. Let's look right there. So that's 18.8 right there at that area. Did I say 20? 22.5 on that? Yeah, I was looking at this target up here. Yeah. So you notice this target basically takes you to the almost up there to that channel resistance up there. You notice right here what we hit was that supply structure right there. Now we're building up to potentially pop through it. Let me see here. Let's look at the weekly again. That's weekly supply right there. But I'm also significant, even more than this right here, what I'm really interested in is this right here. This supply right here, I think, is the big one that needs to be overcome. That big weekly supply from 0.19159 to 0.22671. That is the big one that needs to be kind of taken out. And kind of that target's up in that area there. But and I said this was the resistance. This is the local channel EQ. Sorry. It's the local ascending channel EQ right here. So I think, that kind of area looks really interesting as far as the target goes, and then potentially maybe even a reversal from there, but we'll see. Yeah. Hey, you're welcome there, TV Kanai. Yeah, and again, it just depends on what goes on here, how this all plays out. I think the biggest thing you guys need to pay attention to is what goes on with the dollar and then Bitcoin. Because if Bitcoin tanks, if Bitcoin starts takes on a negative trend, your altcoins should generally all take on a negative trend as well. For the most part. Like I said, there'll probably be some that won't, but generally that's what we would expect. So yeah, I'm just kind of looking at that. So, again, everything we talk about is just until potentially something else happens. That's why I give you this support here. I can definitely see the move up there, the higher, and it may continue higher from there. I mean, the trend is up, so okay. But if you lose this support here, then you really need to start looking here, I think, down at this kind of area. Again, that 0.07.5 to 0.08.5 kind of area. I think that becomes your next area of support if you're dropping out of that channel there. Again, where do we end up getting on this? The target based on the channel. See, look at that. If there was a breakdown here and we were to drop through, say, on the 8th of January or whatever, heck, we do it sooner than that. Notice, though, notice how your target becomes the channel support as well as this potential demand structure down here. Exactly the places I told you guys to look. And those are the targets off this ascending local channel here, depending on where you come out of that, wherever it breaks down. So, makes a lot of sense where we're looking there, guys. All right? So that's what I'm kind of looking at there. Bitcoin. Let me pull another Bitcoin chart here. That's gold. There's Bitcoin. So right now you can see that it's finding resistance right here at this previous. Do you notice right here? Always look left, guys. Always look left. Look at this right here. Resistance, support, resistance, support, resistance. If we can overcome that, that makes this upside start looking a lot more serious. Yeah. So definitely watch that there. But remember, guys, the big thing at the end of the day, if you go beyond your emotional bias of what you want something to do, the big thing is to understand how everything comes together in the big scheme of things. Again, you have to understand that the dollar is the world's reserve currency. So what happens with the dollar necessarily impacts what happens with pretty much all the other markets, and whatnot. And if the dollar is strengthening, you're going to be looking at countries that are going to be devaluing their currency against it. More so because, again, it's all about that cheap debt. Because they have to buy dollars. See, real quick here, guys, before I go. Remember, if a country wants to buy debt, they have to buy it with U.S. dollars. And if they go to buy U.S. dollars, as dollar price is rising, that means it's going to cost them more to get that debt, right? And so what they'll do is they'll devalue their currency so that they're kind of offsetting that extra charge that they would be getting there. Remember, EU's in deflation right now. China's in deflation. U.S. is teetering on the edge of it. The other thing I have here, guys, that I posted, in case you guys weren't paying attention, again, I tell you guys, pay attention to all this stuff. This was actually something that was brought up to me by a member. I totally missed this. By the way, Coinbase is going IPO. They're hoping to anyway. Might not be the best time to do that, right? Real quick here. George Gonclaves here says this idea by the Fed Chair Powell will likely mark the beginning of the end of the risk market top. In the future will be compared to Bernanke's comments that we have never had a decline in house prices on a nationwide basis months before it all started to unravel. I was thinking the same thing. He wrote it. I just potted on there. The idea being, though, that the Fed chair is pretty either acting oblivious or is oblivious to what's about to happen. Hey, that Coinbase IPO is confidential. By the way, again, I keep talking about this is the thing to note. Market tops, you get stuff like this. We're barely above the all-time high. We got people talking about $400,000 that it should be worth about it right now. These things don't happen at the beginning of bull runs. They happen at the end. Let me see here. like Danielle. By the way, guys, if you're not following these people, follow them. Danielle Booth. She owns Quill Intelligence. Very, very smart individual. She talks about Powell talking up the credit facilities despite their barely being tapped. Like she said, they're on hiatus, not retired. Bless him. He ensures only solvent firms on the receiving end of the Fed policy. Maybe he didn't read yesterday's Financial Times article that showed 90% of zombies would never be revived. Zombie companies are huge right now, guys. Tons of them out there. No real change for the Fed. Their December FOMC statement. They're going to continue doing what they continue to do is what they said. But I'm trying to find this. Don't forget, guys, just a limited number of those tier 3. By the way, we've also got a macroeconomic and finance channel in there as well, where we do a lot more discussing of these larger concepts. So that's in there as well. Let me see here. Where was it at? God dog it. By the way, right here, again, you guys are all talking about inflation, right? International Monetary Fund. They state the COVID-19 pandemic is causing an unprecedented worldwide economic contraction. Worse yet, it says the policies implemented may have, if unintentionally, increased medium and long-run macro-financial vulnerabilities. Again, guys, it's everything that I'm talking about. It's all this, and this is coming from the International Monetary Fund, the IMF, guys. There is also, oh man, where is it? Oh, the Bank of Japan link. I can't find it. Where's that Bank of Japan link? By the way, if you're wondering about credit contraction that I was talking about, here you go. This is 2020. This is commercial and industrial loans, all commercial banks. Look at that contraction. If this thing continues on, deflation's there, man. I'm telling you guys. Where is the BOJ? Doggone. I'm so sorry, guys. I'm going to go ahead and let you guys get out of here in just a second. You can leave whenever you want, obviously, but I missed my article there. I do have an article somewhere. Oh, right here. Jesus, right here. If you guys want to check this out, check it out. I hate that website, though. It's really kind of as far as pop-ups and ads go. But basically what they said is the Bank of Japan strains up to $6 billion in USD. And they're doing it as a preemptive measure, they said, just in case dollar liquidity becomes an issue. If the Bank of Japan is loading up on 6 billion USDs because they're concerned that dollar liquidity might become an issue, don't you think maybe you should think, or that you should think the same thing? Stop listening to, to people online that, what they're saying about inflation. It is a possibility, but you have the big players, the banks, concerned about it because it affects their debt that they hold. So, no, it's not so much though, but it is significant in that they're doing it at this point as a preemptive measure in case dollar liquidity. They're not meant to be 6 billion and they're going to hold whatever. The 6 billion is meant to get them through that period in which there's dollar liquidity. The dollar liquidity is not there. So the 6 billion is just to make sure, hopefully, that they can make it through that period. That's what that 6 billion is for. But the fact that they're making such a big deal about it, I mean, I think you guys should pay attention. It doesn't mean you have to believe that there's going to be deflation. But if this doesn't make you honestly sit up and go, okay, well, maybe it's really a possibility, then you're not doing what you should be doing as a trader. You've got real money in real markets, guys. Act like you do. Have respect for your money. I used to talk about this all the time. You had to do something to get the money you had. Hopefully you didn't rob nobody. But you had to work. You had to go to school and get some kind of education, spend years doing that. You had to trade off to get the money that you have today. Have respect for it. Don't just throw it in there and go, oh, well, it's gone. If you don't respect your money, you won't be able to make any extra of it. You have to have respect for it, which means you need to pay attention to the things that are going on. All right? Anyway, I want to leave it over here, guys. I'm going to get out of here. I appreciate those of y'all who were able to hang around and make it this whole time. Like I said, guys, nothing of what I said in here said that everything has to do this. But this is, everything that's happening right now is what I've been talking about since 2018, and it's been building up, and it's done it in steps as I've been talking about it. So, we'll see. I saw the 2008 top when it was in. I got out in time with that. 2001 was my first, that was 6 years after I started. That was my first real big market collapse. That sucked. But I've learned a lot since then. I saw 2018, didn't get hurt with that. What we have now, the way it's been building up, I really think we're at a macro credit top. So we'll see what happens, guys. But just because I think that doesn't mean that's necessarily what's going to happen. Okay? Robbing is not a valid option, Data. Never. You guys, thank you so much for checking in. Seriously, I do appreciate you guys spending the time with me. I know a lot of people think they don't have time to spend here for 2 hours, but let's face it, guys. We do this a couple of times a week. This is the only one where we spend 2 hours doing it. And I'm just a firm believer. I haven't gotten to my life where I have by saying, oh, I don't have time to do the things that are going to make me money. Okay? So I think that's really the most important point to get out of there. If you say you don't have time, do you really not? Or do you just not make time to do something that you think is important? Maybe you don't think it's important. It is what it is. Okay? You guys have a great day. Trade safe. Remember, the only thing you control in the market is how much you lose. That's it. That's why risk management, as Telluride said, there is the absolute most important thing you were ever going to do as a trader. Take it seriously. Do it day in and day out. I promise that is where you make your money. Okay, guys? So you go do that. Have a great weekend. Next week is holiday week. We're going to maybe have some issues with liquidity. So I'll be back on Monday at 10 a.m., 11 a.m. Central Standard Time. So be sure you guys join in. We'll see what's going on with the dollar and Bitcoin at that point. Take care, everybody.